Okay, so without further ado, let's take a look at today's proceedings, and bear with me again while I share the screen. So we've got, again, jam-packed event. We've got the panel on diversity and inclusion. Speakers on that panel, we're pleased to announce that Fiona Hathorn, CEO of Women on Boards. Fiona, if you'd like to just say hello, will be speaking on the panel. Many of you will have met Fiona at our previous events. Professor Stephen Davis of Harvard Law School will also be on the panel, providing an academic viewpoint, best practice viewpoint. Stephen is Associate Director of the Harvard Law School programs on corporate governance and institutional investors. He's also a Senior Fellow at the program on corporate governance. Kathy Kong, Managing Director of Prism Cosec, and the company secretary of Equinity Group PLC, will provide the practical company secretary viewpoint. Following the diversity and inclusion panel, we'll move straight into mergers and acquisitions and activism at a time of coronavirus. The thinking is that with recovery on the way, that M&A and activism will pick up. So we're pleased to note that Jonathan Spitzer, executive editor of CTFN, the leading M&A news source from a professional investor's viewpoint, will be speaking on the topic of M&A, and he will be joined by the highly entertaining and knowledgeable Patrick Sarge, partner of White & Case, as well as Tom Matthews, his fellow partner of White & Case, who will cover activism. Following that, we'll open the floor to your questions, your comments. That will be our networking session. And then finally, we will move on to our virtual wine tasting. So I hope, just like me, you have started to lay out your wine tasting kit. But we will have 2 minutes after the 6:30 networking for us to lay out the wine tasting. So without further ado, what I will do is I will hand over to our panelists on diversity and inclusion, starting off with introductions from each of Fiona, Stephen Davis, and Kathy Kong. Fiona, over to you.
Well, good afternoon, everyone. And I've been tasked with talking about what I believe is a very, very big subject. And I'm going to cover diversity and inclusion, and I'm going to look at 3 areas for you: performance and leadership, failed diversity and inclusion initiatives, and also the role of the non-executive director, and I would add the company secretary, with regard to what's going on within companies in terms of diversity and inclusion. Now, ensuring a company is transparent, collaborative and inclusive is not easy and requires an enormous amount of effort. Effort which has nothing to do with doing the right thing. Effort because it's about the bottom line. It is about the performance of companies. And it's also about your products, your markets and your customers, and wanting to be challenged. Now, many of you might have seen recently the McKinsey report, Diversity Wins, which clearly shows that those companies that are diverse within outperform, significantly outperform. So I'm not going to labour on that, but I will give you the number. The top companies, the fast movers, are outperforming by 48% in terms of profitability if they're diverse at the top. And those that are ethnically diverse are also outperforming the least by 36%. So it is about the bottom line. The problem is, as we all know, this is great stuff, but recruiting and retaining diverse talent is very, very difficult. And you know, and I know, there's a persistence in the gender pay gap alongside the Black Lives Matter movement, which shows to me that inequality is still rife within our society. It's not always the company's fault. So most organisations are struggling. But I will say that those that have already achieved 30% of female representation, for an example, on boards, it's time to go beyond that and actually look at what's going on within and start investing in talent management and taking firm action. And you can't do that unless you have the data. And the data in terms of not just your overall company, but subsidiaries, departments, divisions. Not every area within your company looks the same. Amazingly, and I would say that, finally, investors and shareholders and regulators and all the other stakeholders out there are asking you questions. So boards now have to be prepared. So it's really, really important. The problem is that being a collaborative manager is extremely difficult. And lots of companies have been doing mass market unconscious bias training, which hasn't worked. It doesn't shift the needle. And so that brings me on to failed initiatives. Now, I run a networking organisation called Women on Boards and also work with about 30 different global corporates via a brand called NextGen. And I've recently looked at the research that King's College have come up with regard to what's not working, and you might be surprised. Minority networks led by non-diversity and inclusion experts and enthusiastic committees are not shifting the dial. I'm not saying they're not right to have them, but they're not shifting the dial. I've mentioned unconscious bias training. Now, one of the things that's very, very in vogue at the moment is cross-mentoring programs, organised almost for free within companies. Yes, I know mentoring is important and I know advocacy is important, but successful people have tons of mentors. They don't have one random person who may or may not know what they're talking about and certainly don't necessarily know what it's like to be a minority. And the fourth thing that King's College found that wasn't working are these brand new fix the minority internal initiatives. Yes, they're fun. Yes, they get good feedback, but they often alienate the current leaders and the middle managers. These programs often have no content, or they are confidence-based programs, which, you know, if you look at what Boris Groysberg talks about from Harvard, that what gets you to the C-suite, you need content. You need things like strategic thinking, change management knowledge, and finance. So that's what I would like to see. So the core problem, sadly, is also that diversity and inclusion leads themselves. And I don't want to offend anybody here, but many of them know very little about the field that they're charged to lead. They're often senior managers, senior women, or senior BAME executives, or a male champion of change, or they're junior individuals charged with changing a firm's culture, and they're simply box sticking or writing activity reports. We need influential leaders leading this change program. So my question now is what to do? And why do I believe non-execs and company secretaries need to step up? Well, first and foremost, it should be treated like a change program. You need to invest in collaborative leadership skills. It's difficult to be collaborative. It's difficult to read well, to manage good meetings effectively, challenging yourself. So it is time to step up. So on the next slide, which you can see now, we've written a report. 6 questions that non-execs, or 5 questions that non-execs need to ask, and a 6-point plan, which I'm sure Cheryl will share with you later. But it really is time to challenge, because this is about productivity innovation. This is about brand reputation and the long-term survivability of your organisation. And I believe it's your duty to step up. And that's why I have these 5 questions for non-execs and company secretaries to ask. And I'm not going to go on much longer now, Cheryl, I promise you, but you can see the questions there. Do you have the right KPIs? Do you have the right metrics? Are you able to ask the right questions? Do not rely on your C-suite executives saying we've got it covered. There is no evidence that they have got it covered. You need to take ownership of it and put it within a committee. And good companies, good FTSE 100 companies, are making it part of the ESG committee, which is great. So that's a whistle-stop tour for me. Do take a look at that plan. But I think it's time to not assume that companies have this covered, because they haven't. So that's everything for me.
Thank you, Fiona. Great introduction. We'll come back to those points. Let me hand over to Professor Stephen Davis for his introduction on D&I. Stephen.
Thanks, Cheryl, and delighted to be here. And one quick warning that I'll be talking about my top line issues here, but I'm going to have to do it without the benefit of fine wine. So I just hopefully it'll go well anyway. So my main points are that there are three drivers, and they're very powerful drivers, and they're very new drivers that make diversity and inclusion something that is clearly not going to be a fad or anything that leaves the scene anytime soon. So the first item I'd start with, and I'll start with sort of the grassroots citizen investors, is the fact that we now have a lot of data that millennial investors are much different in their expectations compared to their parents about what they want from their investments. And it's clear that they are keen on getting their investments aligned with their values. And interestingly enough, women are twice as likely as men to consider investments that deliver positive returns as well as positive impact. And this is quite important because in the next several decades, the expectation is that something on the order of 30 trillion US dollars will be passing into the hands of millennial investors. And moreover, according to Oppenheimer funds, 66% of consumer wealth in the United States will be controlled by women. And so what we're seeing is capital that is much more attuned to social issues, including diversity and inclusion. And I would say that this megatrend is getting sort of turbocharged through social movements such as Black Lives Matter, as well as NGOs. And I'm thinking here of some of you may have seen a new one called Make My Money Matter. Richard Curtis helped start that. Share Action, which I was on the board of until recently, and of course a relentless attention of social media. So all these are proving to be an important collective pressure on both politicians and on asset managers to remake capitalism in effect and expectations around how businesses behave. So the second big driver, I would suggest then, is moving up the financial chain to the institutional investors. Institutional investors have made, in the last 3 years, stewardship a powerful new discipline within investment, where diversity and inclusion is now at the heart of their engagement process with companies. And I thought that one of the better comments I saw about this was from State Street Global Advisors earlier this year, in which the CEO said, quote, "We believe a company's ESG score will soon effectively be as important as its credit rating," unquote. That's powerful stuff because it is a new type of investor that we're looking at. And these are large, some of the largest investors in the world. We all know State Street did the Fearless Girl statue, which became sort of iconic for, and part of State Street's brand. now. And just 2 weeks ago, the head of State Street sent a letter to board chairs spelling out how it sees diversity and what it wants to see in diversity. And anyone who wants to see that can find it on our Harvard blog today. In effect, investors, big investors, are saying that when we see a monoculture at the head of a company which faces a diverse set of risks and opportunities worldwide, what that does is give rise to governance risk for a company. And they are beginning to build that perspective into their investment process. And it's not just words. We've seen in the last 3 years, literally from 2017 to 2020, a doubling of stewardship professionals within investing institutions. And as someone wrote about this in the Financial Times, again, a quote I thought was accurate, I'm not sure boards are ready for all this stewardship that is coming their way because of these hires. So I think this is a fundamental new infrastructure that exists that will drive diversity. And then third, at the top of the chain, I would point to the EU and UK governments, which are pushing diversity regulation or best practice. For now, as we know, the United States is a bit of an outlier where the Trump administration has mixed messages on this question. But I would expect, who knows what will happen at the November election. It will take a lot more than fine wine for me to know that. But my guess is if the Biden campaign does win, that we will see the United States joining in on rules and regulations that will prompt diversity and inclusion. And I think it's important to know that if you look at the EU level and also the UK, it's not just about regulation concerning or quotas for numbers of women and others, diverse candidates on boards, but it's also a requirement for corporate disclosure, which is a problem in jurisdictions such as France. But it's also prompting investors to maintain vigilance on portfolio company board composition. And that is something, again, that means that infrastructure is building up that makes this a permanent feature of the capital market. With that, I will stop and hand over. And thank you again.
Thank you, Stephen. It would be great to ask you a few questions, particularly on the institutional investor viewpoint. Let's hand over to Kathy Kong, Managing Director of Prism, for the company secretary viewpoint. Kathy, we're about 5 minutes behind, so I'll let you lead us back on track.
Okay. So I'm gonna just give a short background into how I think the Cosec can play a pivotal role in the board in driving the D&I agenda. From my perspective, Cosec, as we all know, we're in a very privileged position where we interplay with our connection with the board and also with the senior executive management, and also as ourselves as work colleagues. Certainly for me, being a FTSE Cosec at Equinity for the last over 4 years, how it's developed me in a sense that where I see diversity plays 3 roles. My day job as a Cosec in ensuring that the board is given all relevant information so that they make a balanced view. How I work together as my colleague in terms of an organisation. Is this organisation that I would want to stay in? Definitely from a perspective as a person who comes from an ethnic minority, and also in terms of my role model as a mother. I've got 2 daughters, and obviously I would want to create an environment where they are confident in a sense that they are recognized for their differences from their ethnic origins. So in the board, it is a key to get onto the agenda. What I've done was make the board aware about the Parker reviews and how that's coming down the pipeline, how we can open up the discussions. That's now, after engaging with the board, is now worked down to our nomination committee. I'm pleased to report that the board has taken the view that we will comply with the objective of the Parker review and work in terms of, like Fiona said, around our data gathering so that we can report on our ethnic diversity by 2024. Unfortunately, we have a system that will capture ethnic diversity. We just thought the other challenges is actually people giving us that data. At the moment, I think we've got about 40% who have actually disclosed their ethnic origins, and obviously the other 60% hasn't. So until we can work a way where we can open that channel and encourage people to start disclosing these data, the board can't do anything with it. We can't take it forward and say how we identifying a trend. Now we started with the, we realized we started with the gender pay gap, you know, with what Hampton Alexander's review has come through, and we struggle through the challenges now. Companies are reporting their gender pay gap. And I would think with ethnic diversity that will start on the same line as well. So I think I don't want to overstep my timing. There's more I can say, but I think I should just leave that there.
Thank you so much, Kathy. So you mentioned about gathering data. Why do you think it's so difficult for companies to collect data on around diversity and inclusion? Maybe Fiona and Stephen, you can jump in as well.
Why do you think?
Why is it so difficult for companies to collect data?
Well, it's from a two perspective. Firstly, does the company have the system to collect that data? So have they look at their HR system? We rolled over, we migrated onto a global system for Workday that enabled us the capability to start collecting ethnic data. The other thing is a personal choice. There are people who have no issue saying, yes, I'm from where, but then other people where actually it's quite a sensitive data to them. So until we educate and open to people and saying, the data is not going to be used against you negatively or positively, but it's a way to open up in terms of awareness. I think if we educate people more around saying, look, you know, stand up. Fiona's right. We got to stand up. I am standing up as a Cosec, you know, pushing this agenda. I'm also the network chair for our multicultural, and I'm pushing through the ethnic diversity agenda through that way as well by engaging with my colleagues across the organisation. It's not an easy answer. I can speak from experience.
Fiona, what do you think?
I think Kathy's right. This is sensitive data, and it's one of the, you know, it's a legally defined sensitive data. So one has to be very careful the way we look after that data. But Kathy's right. If people trust you and you explain how you're going to use it. But I get very frustrated with companies who set targets, which I call unintelligent targets, a target at the top level. A target needs to be relevant for every division. So if you've only got 5% women at the start and you've got no turnover that division, do not give them a target of 20% in 2 years' time. It is physically impossible for them to get there. But I also know of companies that have diversity and inclusion committees and they're told that they can't have any data because it's too sensitive. Well, how can they make any decisions? How can they identify where the problem areas are within the company? This data is absolutely crucial and trust is important. But how many companies do I work with that are not investing in collaborative leadership? Because trust comes from whether you trust your line manager, whether you trust your division. And I think that's so important. And it links right back into what Stephen was talking about in terms of governance, performance, creative thinking, innovation, and that fast-paced global world that we're in today. You're on mute, Cheryl.
Thanks, Fiona. Let's move this on a little bit. Let's progress this then. Black Lives Matter The gender diversity agenda has been pushed for some time now, and some will argue that actually to the detriment of ethnic diversity. So since the goings on in Minneapolis in the US, obviously ethnic diversity has come to the forefront. What is this panel's take on Black Lives Matter?
I mean, Steve.
Yeah, well, I was going to say that I think Cheryl is absolutely right that I can't tell you how many conferences and roundtables I've been at where investors in the last few years have very explicitly been on board with the idea that we need gender diversity, but they have been quite explicit until recently in saying, well, gender is much easier to sort out. Let's do that first. And what has happened now with Black Lives Matter is that that stance is no longer sustainable. And so you have seen with different language, investors such as BlackRock and State Street Global Advisors being very open now and saying that they need to address this. And, you know, interestingly enough, unlike, say, the Occupy movement, which turned out to be a bit of a pop-up social movement for a while and kind of disappeared, Black Lives Matter is being echoed now through social institutions, through NGOs. It has reverberated and chimed with infrastructure, social infrastructure that exists. And therefore, I think it has a lot more staying power. And we have, and so I expect this won't go away, such as the Occupy movement kind of faded. This is something that investors are now quite open about embracing. And interestingly enough, because we know that financial services are perhaps the least diverse sector, among them anyway, in the world. That you see notices, you see sort of language now. State Street's message to boards that I mentioned did say that it itself has a problem with diversity, and it is intending to work on it. So I think this is here to stay.
Fiona.
If I can, just I think the Black Lives Matter movement has reminded us we're all individual. I'm a minority in the senior management level with regard to women in business, but I don't have the same biases and prejudices that somebody who is from the Bain background, you know, Kathy mentioned that herself, but it's different again being Black. And I think that's really, really important. But picking up on the Parker Review, the Parker Review is about getting one Black minority. That's the target on every board. The Women on Boards movement is about 30% on average. There are still lots of boards with no women at all. So for people to say, oh, well, it's job done, it's just not the case. And outside the FTSE 350, we're about 12% not moving. There are hundreds of boards with no women on, let alone any minorities. And I bring it back again to its collaborative leadership. If you have good leaders who understand the issues that individual people have and spend the time and listen and engage them, you will solve the issue. But I think it's great that well, it's not great that the Black Lives Matter because of the circumstances. Of course it's not. But when we went into COVID, most D&I budgets were put on hold and they weren't coming back. The minute Black Lives Matter happens, most companies panicked. They realized the brand reputation they've had and they've put it back on the agenda. And I think that is great to see. And it's extremely important we treat people as individuals within Bain and in every other characteristic.
Thanks, Fiona. I just want to ask a couple more questions. So I'm just going to jump a little bit here. You and Stephen both mentioned institutional investors, asset managers. Obviously, this forum is to company secretaries largely. Asset managers don't have a whole deal of diversity within their organizations. What do they need to do to become more diverse? And then maybe, Stephen, to you, how are institutional investors addressing, D&I, pushing that further? Fiona?
Well, I mean, Stephen mentioned earlier this scorecard, the ESG, could be as important as your credit rating. So, you know, it's getting up there. Previously, the institutional investors, it's been largely led by the index funds, State Street, Legal and General, BlackRock in places. It hasn't got on to the investment committees where they're taking those longer portfolio decisions. I bet if we brought Kathy in and said how many times are people bringing it up when they speak to your chairs or the senior independent director, very, very rarely. And I'm hoping that will change, because the data out there is so real with regard to good leadership, likes challenge. They want to look at the customers. They understand the volatile, complex world we're in, and they love it. And so I hope investors will get involved. But we need so much more work. I mean, they're small teams often. I'm an ex-fund manager. The city today in London is worse than when I joined in 1986. I mean, really. A lot to do.
Yeah. Stephen, anything you'd like to add about?
I would say that we're at a moment when, even though stewardship has expanded as a new discipline within the investor world, there is this is still a moment when there's little consensus on how to achieve diversity on boards, and so it's an inchoate situation which means that it's a fertile moment, because it's a moment when there can be engagement between boards and investors, and nobody yet is stuck into their corner to defend their position. So, as a quick example, New York City pension funds, for instance, they have a board accountability project. They've been sending out letters and messages to boards this year, and they want a specific thing. They want to be informed that a company, when it seeks to fill an open board seat, instructs its search firms to find diverse candidates. So they want assurance, this investor wants assurance of that. State Street's letter that I mentioned a short while ago is a little bit more open. It says, you tell us how you're dealing with it. And it all of this shows that they don't really, it's still a time when there's exploration. I would say then for the corporate secretaries that this is a great experience, or a great opportunity to be able to be in dialogue on an ongoing basis. I think the best corporate secretaries are those that let no light between themselves and the investors in how the two parties think about different issues. Corporate secretaries need to know exactly what investors are thinking, how they are evolving their thinking on this, and basically it's a question of R&D. I mean, corporate secretaries should be doing R&D on governance and investor opinion, just as their companies would do R&D for whatever widgets that they sell.
Okay, thank you, Stephen. So last minute and a half, and I will go to Kathy. You know, your 30 seconds on how has the pandemic altered trends on D&I, if at all, and then maybe Fiona and Stephen, your 30 seconds on that as well. Kathy.
Sorry, in terms of how I run the board meeting, or
you think
the organization?
Do you think the pandemic has derailed the D&I movement at all? Has the pandemic altered trends on D&I?
No, I certainly from within Equinity, I don't think the pandemic has changed our D&I agenda. The D&I agenda has always been consistently on the board agenda program. It's reported on a quarterly basis. It goes through the main board and it goes through our NOMCOM and also our REMCOM as well. What happened with BLM and what brought the issues come to forth hasn't got anything to do with the pandemic. So from my perspective, it hasn't. I mean, it's always been a critical key area for us within Equinity.
Good. Fiona and Stephen.
And I would just say that because we advertise board vacancies for free, that's what my organisation Network's all about, transparency. And Stephen mentioned it. Turn off the spotlight on the people that you know and turn on the floodlights when you're recruiting. Companies put more effort into graduate recruitment than they often do with their boards. So it is about a skills audit. And again, I'm happy to share, our 5-point plan on how to recruit a diverse board. But the good news is that COVID has had an effect. Those companies who thought they hadn't quite got the right executive team or the right board now know for sure they've got to do something about it today. So we've seen a lot of new vacancies coming through of companies who don't really, struggled before and realised they've got to do something about it. So perversely, it's been good news.
Great. So I'm glad, sorry, Stephen, I'll come to you in 10 seconds. Kathy, I am actually glad to hear that, that COVID hasn't derailed our progress on D&I. And I'm glad to hear from Fiona that, in fact, COVID is pushing the agenda forward. Stephen, your thoughts?
Yeah, I agree with both of them. And I think at the beginning of the pandemic, it was a very big open question about whether people would think that, given this economic collapse that has happened worldwide, whether issues around board diversity, corporate social responsibility, whether those would be considered something that actually they can't afford now in a moment of economic collapse. Something fine for when there's an economy rising, but not now. And so that was an open question. I think that's answered no, at least so far. And I think the answer is no, actually people are doubling down because there's a greater sense due to this pandemic of interdependency and especially the importance of alignment of social values and business value. And I think that means investors are behaving in a way that presses for more diversity and inclusion, not just in the way that they interact with boards, but also in the way that they're pushing intermediaries, such as search firms. Fiona mentioned the work that she does in that. Credit raters, standard setters, such as SASB, proxy advisors. So there's a whole infrastructure that has now become devoted to this issue.
Excellent. Well, participants, guests, please feel free to enter your comments and questions in chat while we move on to our next panel. Thank you again, Kathy, Stephen, Fiona. So now we will segue into the hot topic of mergers and acquisitions and activism at a time of coronavirus. So let's bring to the floor Jonathan Spitzer, Executive Editor of CTFN. Hi, Jonathan.
Hi, Cheryl. Thank you very much. It's exciting to speak today to the Women's Company Secretary Circle. So, and it's also an honor to be included with the other very noted and illustrious speakers. So thank you very much. As Cheryl said, I'm Jonathan Spitzer, Executive Editor of CTFN. CTFN is a leading subscription-based news service reporting on and providing intelligence around M&A and significant corporate actions. So what is the present state of deal activity? Not surprisingly, M&A was down 35% in the first quarter of this year and 55% in the second quarter on the heels of the pandemic and the associated lockdowns. However, in the third quarter, we're seeing a remarkable recovery. Through the end of August, deal activity was down just 5% year over year. However, with the announcements last week and this week, such as I'm sure everybody noticed that ARM is changing hands yet again for the price tag of $40 billion US. With that level of activity, I believe we're going to be up. We will see the figures show us up year over year for the third quarter. So clearly a strong recovery in M&A is underway. At CTFN, we expect that that recovery will continue for the rest of this year and into next year. So an important factor to consider when you are thinking about mergers, if you become involved, regulators have become increasingly activist. In the UK, the Competition and Markets Authority, in preparation to go it alone with competition reviews of mergers outside of the authority of the European Commission, increased their staff in last year by 40%. The agency has also moved in a direction that is considered to be more interventionist with regards to enforcement. Secondly, foreign direct investment screening has also become an area of growing regulatory interest. Earlier this year, the UK began a process to expand its powers to intervene in deals, and the European Commission in March sent a memo to member states suggesting that they bolster their FDI guidelines. So today, for example, with the announcement of the ARM-NVIDIA transaction, we've already seen politicians call for commitments from NVIDIA to keep ARM's key intellectual property in the UK, along with the headquarters and employment levels. For company secretaries, an important matter to keep in mind, if you become involved in a transaction that is ultimately reviewed by the CMA, the agency could ask for the production of internal documents with an expanding scope. Emails, internal analysis, instant messages, and handwritten notes are all subject to discovery. So you should assume that anything written down or communicated within your organization about a potential transaction could ultimately be read and examined by regulators. Finally, a note on being prepared for a world of increasing M&A where much of the activity is potentially unsolicited in nature. It is worth considering what's right, what the right strategy is for your firm. If you have specific knowledge or a value-added process that could be leveraged across a larger asset base or over a greater set of customers, M&A might be one tool to consider. On the other hand, your firm may very well become the subject of either an unsolicited offer or of an activist campaign. This may be especially true in a time of cheap funding and of equity market volatility, which leads to disparate views on valuation. So, as always, the best defense for any company against a hostile bid is to be operating as efficiently as possible, as well as to be securing the highest available return for all stakeholders. And in today's world, where activists use ESG as an opening, to be sure to be on the right side of the ESG debate. Being prepared is clearly an important part of coping with unsolicited interest, which may be a perfect opening for Patrick's segue.
Great. Well, thank you so much, Jonathan. Let's hand over to Patrick at your suggestions. So Patrick, there's a ton of acronyms here. Will you let us know what they mean?
Sure. Yeah. Well, I think the story of the market situation at the moment is, as it says there, max, SPACs, pipes, P2Ps, and access to the courts, recourse to the courts. Let me just explain those as requested. So max, what we're talking about there is material adverse change clauses, so break clauses for deals. And many will have seen the Tiffany, Louis Vuitton, Moet Hennessy transaction sort of breaking up recently after months and months of speculation. In the UK, slightly closer to home, we saw Moss Bros on the high street being the subject of a takeover offer from the founder of Crew and other investors. They tried to walk away from that deal, even though it was announced after the beginning of COVID, and indeed after it was declared a pandemic. The UK takeover panel said no. We've been tracking around the world. In New Zealand, there have been a couple of very interesting cases about bidders on takeover offers trying to walk away from deals in the dental clinic sector and also older people healthcare homes. One of those, the target agreed they'd been a MAC, let the bidder walk. In the other case is being fought through the courts. So overall, in the UK especially, we have not seen parties breaking up M&A deals. The courts and the takeover panel are very reluctant to do so, and only in the most extreme circumstances, even more extreme than we've seen with COVID, generally, as it generally has applied to the market, do those deals get broken. Next one is SPACs, special purpose acquisition companies. SPACs have been around in the UK for many years, not terribly successfully. There were a few examples of cash shells that get listed and then go and find something to acquire and thereby reverse the unlisted company onto a listed environment. They are white hot in the UK. They are, record amounts of capital are being raised by lots of big name investors and sponsors, and they are looking for targets to buy. We're seeing a huge amount of interest across Europe, but particularly in the UK, in how SPACs can be brought to the UK market and used to generate M&A opportunities. PIPEs are private investments in public equity, placings in old-fashioned English, but really people use the term PIPEs in the UK market to refer to private equity investors taking a minority stake in a listed company. We saw a PE firm, Clayton, Dubilier and Rice, take a stake in SIG, which does catering and motorway services and stations and so forth. So you can see why that would be a COVID affected business. And there's been a huge number of placings across the market to raise capital in the COVID environment, but PIPEs are, particularly large cornerstone investments being taken by, not by normal institutional investors, but by typically private equity and others. And we're seeing a lot of interest in PIPEs across Europe, particularly in the tech environment, and from tech companies as well as private equity, acquiring minority stakes. P2Ps are public to private deals, so takeovers of listed companies by typically private equity or other sponsors, so pension funds, insurance companies, infrastructure funds and others. And there's a lot of pent-up demand for P2Ps at the moment, and a vast amount of capital looking for a home and some returns. Equity market volatility creates the opportunities to generate those returns, effectively buying something that's undervalued or will return a better than the very low interest rates. And the VIX volatility index is at its highest since 2011 at the moment. So, very significant volatility. And finally, litigation. We spent more time in court fighting it out amongst often founder shareholders and boards than we have in 10 or 15 years over the last 6 months. So we think, as well as that, we've also seen Lloyd's HBOS was the first concluded class action against directors for the representations they made in the scheme M&A documentation back in the financial crisis. That's finally worked its way through the system. Some very interesting outcomes for director liability, but basically the deal was not unwound, and even though disclosure was defective, the court did not find against the directors. So overall, that's the story of the market as we see it. More and more recourse to litigation from investors, and big and small. A growing industry of litigation relating to M&A in the UK and elsewhere in Europe, especially France. Private investors coming in to buy whole companies or minority stakes. These new vehicles or newly refreshed vehicles, SPACs, being a further source of buying firepower. And then people trying to renegotiate deals or walk away from them when they go wrong and failing.
Great. Patrick, thank you. It looks like we're entering a busy period. Well, you certainly will be. There's an active chat going on in regard to diversity and inclusion. Please feel free to also ask questions as regard to M&A. It would be great to continue the conversation with White and Case on activism and how COVID is affecting activism. Perhaps we can continue with Patrick or hand over to Tom. Gentlemen?
Tom, why don't you jump in?
Hi, good afternoon, everybody. Delighted to be here. Well, just a quick look back. Certainly, activism has been on the rise in the UK and elsewhere over the last 3, 4, 5 years. Certainly year on year, 2018, 2019 saw increases, but it's very clear that COVID-19 has had an impact on the number of publicly observable activist campaigns in the UK so far this year. And there are two key reasons for that. First of all, I think activists are realists. They recognise that company boards have been rightly focused on preserving the existence of their companies, and an activist campaign timed poorly would be self-defeating. And second of all, as I think Kathy touched on earlier, there have been logistical issues in terms of engaging with shareholders. If you're an activist and want to convene a meeting, how do you do that? You will have all lived through the AGM process this year and the difficulties with that. So, you know, that's something that activists have had in mind as well. The other thing, the other particular point I want to mention, looking back over the last 9 months or 8 or 9 months, is that the types of campaign that have launched have been very different to the year before. Last year, M&A was very high up the agenda for activists, either breakups or value add M&A or opposing public bids. This year, as we've heard, M&A has been significantly down up until this point at least, and so M&A focused campaigns have also been down. Secondly, balance sheet focused campaigns, so an activist asking the company to declare a special dividend or buy back shares have been down as companies have been focused on preserving their liquidity. So definitely down year to date. Patrick will, I think, touch on in a moment what we think that means for the next 6 months, but just one thing to mention, although it's been down on the surface, there's been lots going on underneath the surface, and activists are looking at the K-shaped recovery, the companies that have been winning in the COVID environment and the companies that have been losing, and they've been busy repositioning themselves, either building positions in new stocks, taking advantage of the market volatility, or consolidating existing positions. And they'll also be very focused on some of the narratives that we've been talking about today. The E, the S and the G will be very much points that they focus on, regardless of whatever campaign they may choose to launch in the future. So how boards have performed, how companies have performed through the last 6 months reacting to COVID will be very much focused on. Did the board take a pay cut? Did they cut the dividend? Did they cancel the share buyback? Did they furlough whilst making record profits? Did they reduce, as we've heard, did they reduce investment in the D&I programme? How have suppliers been treated? Were supply chain issues managed properly? And how is the return to office being managed is a very topical issue at the moment. All of those things will be narratives that investors will look at, and it will resonate with different investor bases depending on who decides to pull on that particular thread.
That's interesting, Tom, because you know, about a decade ago, savvy activist investors started bringing in corporate governance into the activist campaigns. So what you're envisaging is that these financial activists will actually focus on matters such as diversity and ESG as part of their campaigns?
Well, I think it's, I mean, let's not be naive. There are some activists out there who are, as you say, Cheryl, purely focused on the financial return. However, it's not a very difficult leap for them to say that the current board is taking the company in the wrong direction, is not fit for purpose. And why is that? Well, one key reason for that is that they're not sufficiently diverse. They don't have the right thinking in place. They will deploy whatever arguments are available to them, and companies want to find themselves on the right side of that particular debate.
Great, thank you. Patrick, would you like to add anything to the discussion? Yeah.
Thank you. Well, to reiterate what Tom was saying in terms of the degree of activity, we've never been so busy with activism, both acting for companies and acting for activists as we at WoCoS do. But there are a large number of positions being taken, and in fact, only this afternoon, Tom and I were on the phone with a what would be in the US a household name activist fund founder who's lost patience with a company and is going to get very aggressive with them. And there will be a lot more of that. I think on the question of ESG topics and how they play out in an activist situation, I think we'll see kind of more ideological activists as well as financial activists, and we're all familiar with some of those, but I think that's only going to increase. I think with the financial activists, for the reasons that Fiona and Stephen explained at the beginning, it is about financial returns, even on an ESG thesis. As well as that, I do think on the sort of M&A and breakup campaigns where there's a conglomerate discount or a group trades at a discount to its net asset value has been perceived to be relatively easy pickings for an activist. I think redesigning the kind of the sustainability of a business, either to reduce reliance on office space or redesign its supply chain so it's not reliant on certain regions of the world, or the boohoo, hero to zero example of doing very well with the online retailing, but then having really very significant outrage at their working practices. And I think, all of these are examples of actually financial returns being very closely connected with doing the right thing with sustainable business models. And I think business models, as we emerge from COVID, and hopefully, it's only we deal with COVID now and emerge from it on the other side, needs to change to take best advantage of a changed environment. And activists will be pushing for that. So I think that's where a number of these things come together. I just finally say that no company is too big or too small. There are ever more players in this space and more first-time activists in the UK. And no company is too big, as I say, but others, there are smaller funds who will quite happily play, hundreds of thousands of pounds in a position. And finally, we saw in the last year or so, bear attacks, short selling coming to the UK with Burford and a couple of other situations. But I think the Wirecard fraud, as it appears to be, the Wirecard situation, has only sort of vindicated that approach. So I think we will see theses coming from activists that companies, financial position isn't what it appears to be, and we'll be seeing more of those sort of attacks.
Okay, I would like to get your in terms of managing activism. I'm just looking at Carolyn Trousdale, for example, who's gone through activism, M&A, pretty much everything, because it's the company secretaries that is thrown in the line of fire. But I think Stephen Davis, you raised your hand to want to add. Would you like to add anything to the activism discussion?
Yeah, just a brief comment, which is that I think it's important to observe that most activists, not all, but they usually have a pretty small stake at the end of the day in companies. And for them to succeed in their mission, they have to bring along the big investors that we've talked about through this call. And because those big investors are moving much more towards issues around ESG, the activists are being very pragmatic and playing up ESG, even if it may not be part of their own DNA, they're playing up ESG because it's a way to win friends.
I agree with that. And whereas it was a bit of an add-on or a negative element to throw into a campaign that the governance wasn't as good as it could be, I think it will be more and more of a positive. You need to do something to be more ESG focused and meet various of the relevant criteria. Excuse me. In terms of what company secretaries can do to mitigate the risk of activism or hostile bids, or at least make their companies better able to respond in an agile and suitable fashion. As ever, it's about preparation. It's about knowing the company's strengths and weaknesses. It's about acknowledging what those are. There's often a degree of denial amongst boards about, well, we might not comply with that rigid scorecard, but we have all sorts of good reasons why our board looks like this or why our business looks like that. Well, that's fine, but you're on the back foot explaining them once the activist has already called you out on it. So I think engaging, as ever, engaging with your stakeholders and investors in advance, thinking about doing some analysis about maybe get a kind of red team analysis from your brokers or lawyers or PR advisors or proxy advisors about what the company looks like from the outside and what you could do about it is time well spent. That sort of wargaming a situation will pay dividends in many cases. There's a nice FT article I read some time ago that said, if you want to avoid activists, put more women on your boards. There you go. So again, companies not targeted by activists have 13% more women on their boards. So if nothing else, that's one reason to improve your board gender balance.
Thank you, Patrick. Any final thoughts, Jonathan Spitzer, Tom Matthews? You've got 30 seconds each, and then we're going to open to questions.
Jonathan, after you.
I think everything has been very well said. I mean, I would go back to the Alliance Trust Elliott case, where Elliott very cleverly used the governance argument, as Professor Stephen Davis said, to secure the support of the long-only investor community. And I recently attended a conference at pre-pandemic at Bloomberg, where there was an activist led by a woman who focuses entirely, even though they are financially driven, they focus entirely on ESG matters. So I do think that this this tie-in between the activist as sort of the tip of the spear and the institutional investor coming along because it promotes their agenda as well will be an increasingly important part of the landscape.
Great. Tom?
Yeah, and I'd just I'd echo what's just said. If you have a good ESG story to tell, get ahead of that story. Make sure you're communicating it in your periodic reporting, making sure you're communicating it in your discussions with investors. We're obviously talking about diversity inclusion today, but some of the S coming out of COVID, how you've treated your employees, how you treated your supply chain, that will be focused on as we move further away from lockdown and into growth mode. And you want to make sure you understand your themes around that and how well you performed.
Great. Thank you so much, Tom, Patrick, Jonathan. There's plenty of questions on the chat. Fiona, you're a very popular woman. We do have collateral that we'd be happy to share after the session. So if there's any requests for information, we will send the information through to you, as well as the contact details of the speakers if you would like that. Can I just ask Anna Torres if for any questions that has been placed on the floor, and I'd also love to bring in a major advocate of diversity and inclusion in Nikki Take, who is a trans woman, a CEO, and corporate drag queen. But let's go to the questions. Let's go to a question from the floor first, Anna.
Sure, thank you, Cheryl. So yes, we have lots of questions and comments. Most of them are in relation to diversity and inclusion, as you just mentioned. So I will try to mention as many as I can. For example, the first one comes from Kate Bragnell. Thank you, Kate. She says, really interesting. I wonder when we will see more conversation around disability diversity on boards too. We also have another comment and question from Helen Thorpe, for example. She says, a very interesting discussion. I would be interested to hear if Fiona has any theories or opinions about why gender diversity has gone backwards in the city since the late 80s, despite all the initiatives since then.
Great. Fiona.
Well, one of the things that has not helped is the financial crisis. The financial crisis in the banking industry and the city in general has put quite a lot of women off. And I think it's up to the city to reach out, and also schools, to really talk about what a fantastic career being a fund manager is. And it's hard changing things. It's a bit like recruiting a diverse board. Recruiting diverse graduates requires you to go to different universities, have different conversations, start it earlier, and that by and large is not being done. I spoke to a headmaster recently who said it's not my fault that girls don't take code, and I said, I'm sorry, it is exactly your fault. What is it that your company is doing, your school is doing to disengage young women taking coding? And it's the same in the city. We need to encourage and we need to support. The fund management industry is data and metrics. It doesn't matter what you look like as long as you perform. The private equity people, they don't care as long as you perform, and it's wonderful. So it's a fantastic career, but yes, it's very distressing.
Sorry, can I attempt an answer at the disability question, please? Because I think in certain companies and certain industries, we will see that being a more obviously urgent question. So a company, a health company, or one who makes, I don't know, equipment for people with certain disabilities. And also, an age is another dimension of diversity, which will be more obviously directly relevant for certain companies ahead of others, perhaps. So I think it is with those companies that we will start seeing these issues coming to light sooner. It's a slightly left field example, but Gucci famously created a shadow board of much younger people to look at decision making, and it's been very successful for their brand and their company, their business. I would have thought that with everything from financial services and savings products, we talked about, the professor talked about the young people having, or women having a huge amount of spending and investment decision making. We will certainly see that with the millennial generation as well. So I do think I would expect that is the sort of frontier at which those battles will be fought initially, but of course they should be everywhere.
I'd just like to add on disability. Sport England, I've got a programme at the moment to recruit 200 BAME and disabled board members for our sports boards across the UK. And Patrick, I couldn't agree with you enough. That Gucci board, I think if you are running any type of large organisation and you're not setting up a shadow board to challenge yourself, I think that's a great story. And I think it's very, very important. Diversity is all forms, all aspects, and I think age diversity to challenge in this environment is very important. But it's a great article, the Gucci shadow board.
Great. So this event is proving very popular. We actually have 3 chairmen, FTSE chairmen in this event, even though it's a women's company secretary circle, which is very encouraging in that it means that non-exec directors are supporting the progression of diversity and inclusion. It would be great if I could just get Nikki's thoughts on the conversation. I know Professor Stephen also would like to say, share a few thoughts, and maybe I could also hand the mic down the line to Chairman Paul Lester of McCarthy and Stone and Essentra. Nikki, you go first.
Okay, well, I'll be really short. I was minded. I'm going to say something about diversity and inclusion, but I thought I should also add that I'm currently doing an interim job with Mercer, who are part of MMC, and I'm head of growth for what is effectively the largest pension advisory company in the UK with revenues of 650 million. And I've just come out of a meeting about our ESG advisory. Our investment consultants have been investing, if you like, in ESG for building the team for about 16 years, and so we're a long way ahead of the rest of the marketplace. But we are seeing more and more now, when people are tendering for their investment consultants for their pension funds, a requirement for ESG. And we have a case study for a borough of Islington where we've helped them reorganize their strategic asset allocation so that it is on track to be a 0 carbon footprint portfolio over the next 10 years. And I think you're going to find more and more pension funds as an investor are going to be choosing investment strategies or assets to invest in that, and that have a good ESG rating. And we are more than Mercer are being more and more are being asked to assess people's ESG credentials as part of the investment strategy. So just a heads up, if you're looking for institutional investors and any of them happen to be pension funds, then Mercer is helping them put this at the head of the agenda, and so you need to respond. Anyway, I wanted to talk about D&I, and I have kind of two quotes in my head. One comes out of Fiona's piece, which which I'm all sure you're all familiar with, and it's Einstein's quote that doing the same thing over and over again and expecting different results is the definition of insanity. Food for thought, I think. Right? If you've been trying on your D&I to do stuff that's not working, then you're not. So one observation for you. The second one, I always have to tinge this because it's one of my favourite quotes. I use it all the time. But I have to give you a second quote from Darwin in a minute. But this is a quote from Darwin, who said that it is not the strongest of the species that survives, nor is it the most intelligent that survives, but it is the most adaptable to change. And so change or die is kind of the message. And I think we're seeing a big impetus for organizations to and change, otherwise they are. And because of course my least favorite quote of Darwin, as a FT hero, women supporting women in boards, I don't really like this quote, but Darwin was also famous for saying that the male of the species had out-evolved the female of the species, and at that point I decided to stop looking for quotes from him. But the one for adaptable change is fairly important, and then I'm going to wrap up my little spiel by those of you that saw me present to you in February. I ended that speech with with this little tidbit for you, which I stand by. Have a look at your board. Have a good, cold, hard look at your board. If it is all straight and white, you're dead in 10 years. And if it's all straight, white and male, you're dead now. You're just too stupid to realize it. So I'll leave it at that. Like, the world is changing, and if you don't, you'll die. So change.
Okay, Nikki, well, insightful as always, as well as entertaining. Stephen, I think I did say I would go to you, but if I may first perhaps get the point of view of maybe Paul Lester, chairman of Essentra, and McCarthy and Stone. What are your thoughts on diversity and inclusion? What are you and your boards doing? And what do you think about what Nikki has just said?
Yeah, thanks, Cheryl. Yeah, Nikki sort of painted a very big overview picture. I'm going to bring it back very much to what you guys who are set there right now can do about it, because actually it's about making things happen, which was part of Nikki's statement, which I want to focus on, because I suddenly realized before I got onto this call that I've been sitting on PLC boards for 30 years, which is a bit depressing in some respects, but good in another. So I joined all male, absolutely all male. Then I think when I was a CEO, and certainly since I've become chairman, been able to influence all the people in that company to make changes. And I feel we're still on the journey, obviously, because you never stop. But there has been huge progress. I mean, the last 10 years, we have made progress. So it is happening. And you people on the call are part of making that happen. But how do you make it even better? Well, first of all, it comes from the top. If your CEO doesn't believe in this, or he just wants to, or she just wants to tick a few boxes, make a few statements about ESG, approve the annual report that somebody else has written those sections, that's really bad, but it's happening. I know people that do that, and I can say about the chair. So if you feel you've got somebody like that at the top of your organisation, you have a unique position because you are in touch with shareholders. They will say they are, but you're in touch with a wider range of the shareholders who you talk to, and you need to bang on them all the time. If you've got people, I would put myself in the bracket, that absolutely believe in it and want to get it done, because we're busy doing stuff, you need to bang on us as well. You have to be the reminder. You've all got a unique position. I'm talking about the company secretaries on the call, because you have one-to-ones with CEOs and chairmen all the time, unlike anybody else in the organization. Yeah, the CFO goes in there, but all they talk about is figures and other stuff, but not this. Very unusual if it would be this. So you have to use and abuse the privilege that you guys have got, and I mean really push it. I've got a good company secretary at Accenture who's female, and I've got a male at McCarthy & Stone. The first thing I said to them, and they're both relatively new, was just remind me all the time of the things I've forgotten, and remind the CEO, and I include this in it, because people can talk a good game, but they don't, they don't always believe in it, live it, and make it happen. So that's number one. The number two is make sure your company has rules, like every time you hire somebody, I'm going over old ground here, it's 50-50 female, male, woman, man, and 50% diversity. That's really important, and you need to make that happen. The biggest impact I've seen made was getting graduate schemes going, and as a chairman, you're not with businesses forever, but the longest one I've been with 8 years, and I always instigate graduate and apprenticeship schemes wherever I go. Bring young people in, follow the same rules. I want 50-50 and 50% again. And after 3 or 4 or 5 years, they're into middle management, and the retention is huge. I mean, I was just looking at Accenture's. It's something like 60 to 70% after 5 or 6 years who are still there. And even the ones that have gone, they're going to go and spread the message. So bring in the youngsters. They're the best advocates of what you've been talking about all evening. So bring more in. You'll lose a few, but you'll get the value out of it. And I think thinking outside the box, which I think Nikki was talking about, and it looks like on your agenda, get your charities, because all businesses have charities. And that's another box ticking exercise that I don't like. We've got a charity here, a charity there. Get employees involved in charities. Get the employees to pick the charities. Do not let the execs pick the charities. Fatal. Get the employees to pick it, and put in front of them scope. Say it is to improve inclusion. It's getting kids off the street. It's getting people who normally wouldn't work jobs. And I think you've talked about COVID. The most fantastic thing is this, digital capability. So somebody who couldn't travel to work because they're in a wheelchair, they can now work at home. That myth's been killed. So go and get some good people, really great people, sitting at home who can help the company. It could be on a part-time, 20 hours a week or whatever, make it flexible. And some of my companies are just waking up to that. So there's a whole new capability sitting out there that we never thought we could use.
Paul, great input. Thank you so much. Fiona, this is kind of touching on your point about Neds need to step up. So I wonder what your views are in terms of Paul stepping up there. But maybe an idea for the next WoCoS event is, ladies, bring your chair to the event. That would be interesting. So, just conscious of time, we've got our sommelier has just joined, Francis Gimblett. But I just wanted to, Stephen, you wanted to say a few words. And then ladies, at WoCoS, you're all very used to interacting with one another, sharing your views. Obviously, we will be tasting wine, but respectfully, I'm sure Francis will allow us to just continue the discussion over the wine tasting on D&I and activism and M&A. So Stephen, you had a point you wanted to raise.
Yeah, just very quick. And first of all, Cheryl, thank you very much for not asking me to follow Nikki. That would have been a hard act to follow, so I appreciate that. On the other hand, I'm glad Nikki mentioned Einstein, because people say I look like him, so I can look wise even if I'm not. But so I just wanted to return for a moment to the question about the city and why it hasn't gone more diverse. One of the things we can point to going forward is that there is this rise of scrutiny of the city, which didn't really exist before. So you have these NGOs that two I mentioned, Share Action and Make My Money Matter, who are both trying to focus on getting institutional investors, agents of institutions, asset managers accountable, and to putting that, as Fiona put it, putting the floodlights on that sector. And so if they have gone back, they're not going to be able to sustain that for too long.
Excellent. Stephen, thank you so much for those thoughts. It's now 2 minutes before 6:30. If there are any final questions that anyone would like to share, please feel free to do so. Anna, any other questions we have received? Maybe we can invite one of the ladies to ask their questions verbally.
Yes, we have lots.
I think some questions. There's a question from Tracy Lego and Caroline Herms. Ladies, feel free to unmute yourselves and ask your questions.
Hi, can you hear me okay?
Yes, Tracy, hi.
Hi. Yeah, I mean, my perspective on diversity and inclusion is it is incredibly important, and we all need to work hard to boost it, make it better, wider ranging, etc. My issue with it is we work with a lot of different search firms, and we get very rarely do we get a decent balance of candidates. And I just think, how do we both encourage candidates in? We are starting to use the board apprenticeship schemes where people can actually go onto a board and sit alongside for sort of up to 12 months and gain experience there. But I really think we need to bring it younger, and I think Fiona, you also made a point of making this a younger aspect. How do we encourage schools? How do we encourage other organisations to bring younger people in, so the understanding is there at a much younger age?
Can I respond to that, Cheryl? So I had a conversation with the bid team I was coaching the other day, saying, you know, I work in all sorts of different industries, and this is my first time I've spent a year in one, and I am stunned at how this industry, which I think is probably financial services and might just be pensions, is overawed by experience. Like in most of the other industries I work in, 20 years of doing the same thing the wrong way isn't really helpful. And the more experience we've got of people doing it the wrong way, the harder it is to change things. So I wonder if the solution isn't to change your criteria, and instead of looking for people who have got experience of doing it wrong, try and find people who don't have any experience of doing it wrong and aren't afraid at making radical suggestions, and that might actually get you the impetus to change. I think when you go out and you specify you're looking for somebody, particularly at board level, asking for board experience might actually be the barrier that gets you into hiring the same type of people and therefore not getting change. Think outside the box in your recruitment is what I would say.
Fiona?
I mean, just take more time recruiting your non-exec directors. I made it a statement earlier that companies spend more time putting their graduate recruitment program together than they often do with NEDs. Of course you would use a headhunter, you know, that's best practice. Maybe think of paying your headhunter more. You know, they've got the brief, they want to fill the brief, they want to get their money, they want to move to the next one. It takes time, and then force them to transparently advertise. We transparently advertised an AIM listed company that's making hand sanitizer creams. We do it for free. They got 3 NEDs from us, one of which was a man. Why not? Because we're open to all, and it's just fantastic. So you can ask your headhunter to transparently advertise, and then you'll get a few exciting left field candidates, in their terms, not mine. And just one final thing I want to say, Paul, you will probably know Julie Sweet at Accenture, Chief Exec of North America. Goldman Sachs do some fantastic podcasts. Listen to the podcast of Julie Sweet talking about the fast pace of our global world, taking risks, and what you need to do to be successful today, and how she's challenging that business. Is very impressive.
Thank you, everyone. There are some interesting comments that have come through. Clearly, we need more time for these discussions. What we will do is we will provide a follow-up of the points discussed, and we'll make sure that any collateral that people are looking for are also sent through. It would be good to progress over to the wine tasting, but as mentioned, for example, Caroline Herms, our old colleague who is now at Legal and General, has made the point of male pale sale boards, often of a certain age, also very much in the risk category in COVID times. Coronavirus should push diversity drive all the more. Yeah, interesting, Caroline. So maybe something to think about over wine. So I would like to say thanks to all our speakers, Fiona Hathorn of Women on Boards, Professor Stephen Davis / Einstein of Harvard Law School, Kathy Kong, Managing Director of Prism Cosec and Company Secretary of Equinity Group PLC, Jonathan Spitzer, Executive Editor of CTFN, Patrick Sarch, and Tom Matthews, partners of White & Case. You guys have been most delightful, interesting, insightful, and I'm sure we could talk for days. We'll make sure we send through your information to the group, and we would love to welcome you at the next WoCoS.